Okay. What's up, everyone? My name is Faisal. I am the head equities analyst over at thealphatrades.com. On a beautiful, very dark Friday evening, I'm going to be recording this and just going over a couple things that happened today. It was a really important today, and I just wanted to talk about my recent position on going short in tech and going over two of my largest short positions that I'm currently in right now. So let's go ahead and get to it. For those, first of all, who don't know about the Alpha Trades or anything that me and Amol do as far as stock market analysis or crypto analysis, go ahead and check out our website at www.thealphatrades.com for more info. And if you like what you see from there, go ahead and subscribe to our Advantage community that's in our Discord. So basically, we have a premium Discord that has a bunch of channels here. I can actually pull it up for you right now. I'm actually on it right now. That has a bunch of these premium channels right here for all of our Advantage members. So you have things regarding, strictly Bitcoin analysis, Bitcoin chat, altcoin analysis, and then you also have what I do, the stock market stuff. I put out updates usually at night and most of the time between 9 a.m. and 11 a.m. during market hours. So I like to give people a little bit of what I'm seeing in the morning, because a lot of times, especially the moves that I make, I can usually tell what the market's feeling within the first hour to 2 hours, and so I usually share that insight within before 12 o'clock at least. So that's just one thing that I do, and I also put out stock alerts, like all you see here, short COUP, selling AYX, trimming my tech. I really just go through a lot of the updates that we put on. Now, these alerts that you see right here, they are positions that I'm either in or positions that have met my criteria to be on the alert list. So that's pretty much what we have in the Advantage side, and it's all concurrent. This is not stuff that I'm posting after the market. This was posted at 10:42 a.m. This is posted at 10:38 a.m. You are always able to ask Amol and I any type of questions. Once again, we are not experts by any means. I'm not telling you that I'm a guy with a crystal ball or anything like that, but we are people who genuinely love to trade the markets, and I trade them every day. Amol trades them every day, and it's just, honestly, it's a passion of mine just to be able to find one asset that's better than the other, or maybe a diamond in the rough in some cases. So I do this every day. I love what I do, and I definitely think you could see it by some of the stuff that I post on Discord, and definitely by the alerts that I put out. So go ahead and check that out. Go ahead and read up on our Advantage community and see if it's right for you, because it's definitely not only just a place to get information, but you definitely pick up a lot of useful information. Like, even myself, as someone who's been with the community for a bit, I still learn new things every day from other members. So it's really a good community to be a part of, and I implore you guys, check that out. But anyways, let's go ahead and get started to today's analysis. So basically, today was a really interesting day, because off the bat, if you just looked at the indexes, you would think to yourself, okay, the Dow was up 150 points. I think S&P was up 0.4%, and NASDAQ was up 0.5%. So just from a broad perspective, it was green on every indicator, except I think the IWM was down. Yeah, the IWM was down almost 1%. This trend just continues to persist as value, whether it's XLI, XLF, XLI actually had its first good day, XLF and XLE. All of them, most of them were down today, and these are the value sectors that kind of coincide with the momentum seen in small caps. So usually when small caps do bad, you'll see value sectors do bad, like financials or energy. And lately, industrials have been a little bit better, but I still consider them a value sector, even though they've gone up a little bit more so than energy, which is still trading down here. And you see industrials have gone all the way up here. They aren't trading at their lows right here compared to well, I guess financials are a little bit better. Energy is the worst one by far. And so basically the value sectors did bad. So in response, what do we expect to do good? Tech, and that's pretty much about it. Because high growth, while usually does very well when value does bad, high growth was actually not that good today. And I think a lot of people, when they look at the headline numbers, like when they look at the NASDAQ going up 50 points, and at some point it was up, 100 points or 80 points, something like that, it was never a really strong day for the NASDAQ. And I'll tell you why. The majority of the NASDAQ's gains were driven by three stocks. It was, I'm sure you guys know about the big two, Apple, which was up almost more than 5% today, Tesla, which was up 2.5% today, and then Nvidia, which was up 4.5% today. Now, these three stocks are all leaders in their own categories, and definitely leaders within tech, but they really didn't impose that much momentum across the sector as you would want to see, nor as you would expect to see compared to what they were doing in the earlier cycles of the recovery. So, for instance, when the market was pretty much down here, and you would get these upswings and rallies. So let's just say, for instance, what date is this? 5/14 to 6/5. Let's go ahead and take that. 5/14. Okay, 5/14. So let's go ahead and start it off at last 321. And oh, dang, it went all the way up to 360. What the hell? It went up that much? Okay, so then it went all the way up to, okay, whoa, 5/13, 16, 6/10. Okay. And then it went all the way up to 320 to 380. That's a pretty big move, 60-point move. Now let's go ahead and check out SMH in that time. 5/13 low to 6/10. The 6/10 is right there, and that's pretty much coinciding with that high of that cycle. Let's go ahead and check out AMD, and then we'll check out another one real quick. AMD 5/10. I'm sorry, 5/13. So let's do last on 5/13. 52.18, and then 6/10. 59. It actually traded sideways, AMD, but I mean, it was kind of in a consolidation range after it had this COUP, really just chopped it up and then exploded to the upside. Maybe I should do one that's more broad. Let's see, Texas Instruments. Yeah, Texas Instruments looks like a little better one. So 5/13 to, oh, I guess something must have happened that dropped this stock. Well, 6/10, whatever. It's still fairly high. It went from 105 to 132. So that's almost a 30% gain. At least like over a 20% gain within that time span. So what I'm trying to say is these moves coincide with their leaders. Like Nvidia obviously gained the most out of most of the stocks and continues to do the best out of the semis. But you also want to see that momentum translate into the other peers, whether it's the secondary peers or the direct peers like AMD. And so far today, it did translate a little bit, like especially in the semi sector. I think that was the most where I saw it translate. AMD was up 1.2%. Texas Instruments, I think, made all-time high today. Oh no, close, but still up 1%. SMH though was up less than 1%. That's still fairly good. So semis did okay today as far as the leadership kind of translating, or I'm sorry, not translating, but providing momentum for its peers. And so far, I think that's exactly what NVIDIA did today. Because when you look at tech from a broad scale, it actually was not that good. And so you look at Apple, And Apple has been the main tech leader for, I don't know, for a long time, beyond this recovery rally. When Apple usually goes up, Microsoft is almost right there with it. Microsoft and Apple almost go up like pretty much when Apple goes up, Microsoft always goes up. They may not go up to the same degree, but usually they outperform at the same time. And so Microsoft today actually closed down almost 1%. Same thing with Salesforce. Actually closed down nearly 1%. Same thing with COUP. Closed down more than 1%. Same thing with OKTA. All of these high growth software leaders that actually did not do well today, and they actually closed down some of them over 1%. Roku is one stock that I'm in that we'll get to later on. This was down more than 1%. So you see there's a lot of differentiating factors that kind of told you, even though there was a lot of strength in the NASDAQ, especially early on, it was the only sector that was up while everything was down. It was primarily because of Apple, NVIDIA, and Tesla. And it's very strange because the narrowness of the market is starting to get even more narrow to the point where it's not even just about sectors, which sectors are going to outperform anymore. It's about which stocks within the sector are going to outperform. So before, people would just say invest in tech, invest in high growth. Now it's seeming like there's a disparity. You can't just, if you're positive on tech and you see Apple going up, you can't just buy Microsoft now like you could beforehand. It's not going to work out to the same length. At least that's what we're seeing now. It just seems like all the money is being concentrated into Tesla, Apple, and NVIDIA, at least in the tech sector. And even in Amazon's case, I think Amazon closed down today. That's another big cap tech name. Yeah, it didn't even have a good day today. And then once again, the NASDAQ was up, Dow was up, and the S&P were up. So why is it that the market's biggest leader besides Apple was down? It can't seem to break through its range. It's really chopping up a little bit. It could have a big breakup to the upside, but we'll see. I think the weakness that we're seeing in broad tech will ultimately translate to the stock coming down, but you never know with Apple. And also, I just want to touch on real quick, RSP, which is the equal weight S&P 500 index. That was actually down today, even though the S&P was up almost 0.5%. So another like thing where I like to say, don't watch the headline numbers, don't look at the index numbers, because they don't always tell the whole story. You have to look at many other factors, whether it's leadership groups, things like equal weighted ETFs like RSP, for example, because once you find that disparity, it's like you really start to understand, okay, this market is getting narrower and narrower, and at some point, do you expect Apple to hold up everything, Apple and Tesla to consistently go up this much in order to hold the Dow and everything else up relatively high? Because I think it's not like it was a terrible day. Like I believe housing did very well today. I think so. Housing was also a contributor to the upside. I mean, damn, it just made an all-time high today. But once again, tech is kind of the main thing that I want to focus on, because it's just been an area that not only am I shorting, but it's been one that I think people feel like they just can't lose in it. And my reasoning for going short was partially on a gut feeling that there's just so much euphoria within tech itself that it's just at some point it's going to fall. Granted, I've been feeling this type of euphoric feeling for like 3-4 weeks now, and the market hasn't fallen yet. So I'm thinking this time is different because I'm seeing the disparity in Microsoft, Tesla, and a lot of the leader groups, and in the high growth leaders. I'm seeing that disparity happen because when you have a day like Apple going up 5% and there's really no residual news, it's kind of just real buying momentum. It just feels like either there's massive short covering because people are just throwing in the towel, or there's like just a rush to buy the stock, and people are just, it's like a euphoric buying. Like people are willing to pay any price, and they're just going to drive up the price high and create this huge amount of gains in short amount of time. But I also think that's a very good scenario. If I was a hedge fund manager or an institution, that's a very good scenario to sell into, because you know that there is a pretty nice inflow of demand for the stock, and you may be able to liquidate large portions of your asset when the demand is this high, because the volume had been high on Apple from the very beginning. I remember at 11 o'clock Central Time, the stock had already passed its average volume, like 50-day average volume. And look at the volume how it closed today. I mean, this is not like you would think there would be some type of earnings or anything like that. Like, damn, there was nothing. I mean, there's no earnings, no nothing. What was the volume on this? 93 million? This was 84 million. The 93 million was on the earnings. So, I mean, on a day like today, there was so much momentum. I feel like, yes, there was a lot of buying, but I also think that a lot of big players could have gotten out because it's just the perfect cover. And with the stock split coming up in Apple and Tesla, I think it makes it really susceptible to a pullback personally, because that split, at least in the retailer's mind, it's just like an event that people are waiting for. Whether or not they feel like it's actually going to create real short-term value, which I don't think it will. Actually, I know it doesn't affect the stock at all in the short term. It's like cutting a whole pie into different pieces. It's still the whole pie, but now you just have more slices. So I don't think it could do anything. It's not going to do anything in the short run as far as creating value, but it could end up, if you have more shares and the stock somehow gets back to this price, I mean, technically you've made more money. That split was very beneficial for you. So I think people are waiting for that split date in order to decide whether or not they want to keep the stock or not. And I think that's very dangerous. And I think that sets up for this market to really sell out, because they know those retailers are going to hold on, and the pain is going to be tough. There is going to be so much doubt within the next week, because I think the stock split is on the 31st. So I think there's going to be so much anxiety about what to do and what's going to happen, because I think Apple's going to sell. I think a lot of these tech stocks are going to sell off this week. I think it's just going to create this whole dilemma, and ultimately you're going to get a scenario where I think Apple will sell straight through its split. Like right after the split happens, that stock is going to continue tanking. I think it's going to continue to tank this week. Or I'm sorry, it's going to tank this week and then continue to tank after. So once again, these are all just my gut calls. They're not really based on any type of historical data or anything, but I see that being a plausible scenario. Like if I was just someone like Warren Buffett who had all this Apple stock, where the hell am I going to unload it? Like, he's a value guy at heart. There's no way he can be comfortable with this, especially with how much stock he has. I know profit taking is coming at some point. Like, let's go ahead and check out the weekly real quick. I just want to see real quick. So the PE ratio is 36. The 5-year high is 38. Okay, that's insane, especially when estimates are coming down for 2020. And honestly, the iPhone shipments, like, isn't there like supply problems as far as iPhones are concerned? Like, I thought that was a whole headline a month or two ago, but I guess analysts have just completely brushed that off or anything. They're just expecting gangbuster sales from the iPhone 5, the iPhone 5G. But anyways, that's just my little spiel on it, and I really think that tech will see a massive sell-off this week. And on the value side, I honestly don't know. You guys have known my position on value. I've been very high on certain value assets, but I don't really know if tech is going to sell off. My hope was that when tech does sell off, money would go out of there and into value. And now I'm really unsure about that. I think that you could just see a broad market sell-off, and while value may not go down as much relative to tech could see a 20, 30% pullback very fast, and value, since it's already down, it may see like a 10 to 15% pullback. I don't really know if there's just not much reason to buy these stocks at this point. There's not even a technical reason. I mean, Sure, I think you could see a dead cat bounce from here. I definitely think they're oversold in the short term, but I'm really, I'm just not expecting them to break above those key levels that they broke through earlier in the week. So I'm on the lookout for that. You know, I'm in some XLE calls, and I have some value assets as well, and I'm looking to get out of them as soon as I see that bounce and they try to retest those key levels. Um, So that's my game plan, at least for the value assets that I have now. I cut a lot of value exposure yesterday, as I noted in my update, but I still have not closed out on a lot of my value positions. So that's just how I'm thinking about it, and hopefully we can see money flow out of tech and into value, but I'm really not counting on it. And so last thing that I want to talk about is the ways that I'm playing this drawdown. So I'm short XLK right now, but the two stocks that I wanted to talk about are, and these are my two biggest positions actually. These are my two biggest short positions. Actually, damn, I think after everything, they are my two biggest positions right now. I'm short PENN and I am short Roku. Now, let me go ahead and give you the spiel on both of these two real quick. First and foremost, I've shorted both of these stocks in the past. I've made money in the past on both of them. So I feel like I kind of know how these stocks trade, first and foremost. That's why I'm willing to put a good amount of capital into them, because I just feel like I've had some luck in determining kind of the short-term tops and the bottoms and getting out. But that's just my personal preference. These are two stocks that are always on my short list. I'm always looking to get in, shorting them at the right time. And because of how high growth has acted, and especially some extended stocks have acted, I think these are the two perfect candidates, and I'll tell you why. In the high growth space, let's just start off with Roku. In the high growth space, I think Roku is really one of the most overvalued high growth stocks, period. One, they have no moat. Two, I like their cash, I like their cash reserves, but they have no content creation whatsoever. For a streaming platform to have this type of valuation, and for you not to have any type of original content or something that's sets you apart from something else, like an Apple TV or one of the other streaming platforms that's out there, I think it's very critical, and you lose out big. And I think it limits your growth and definitely your reach to certain audiences. And not only that, but I also think Roku is at risk of getting phased out by televisions. So I know at my house we have a couple TVs that are Sony, and they all have this this platform. I don't know how to say it. It's like this. It's part of the TV, and I can literally download applications from, I think it's Sony's store. You know, the same store not the PlayStation store, but I guess it's kind of interconnected. You can download an app like Netflix, YouTube, whatever, and it's on that platform, and you can access it through your TV remote. And that's how I do it. That's how I get on Netflix or whatever. And there is no need for Roku. There is never a need for Roku. Now I know they have a lot of international content, I believe, and that's valuable to some people. But I think as streaming services are being built out more and more, even in regards to Netflix, and I'm sure Apple will invest more in international markets. That is a very growing segment for all those companies. And so even if you think that makes Roku unique from a content perspective, I don't think it's sustainable, period, because that looks like that looks exactly where companies like Apple, definitely Netflix is going there, Disney, I think they're all going to try and target the international market. So that's just not, like, it just doesn't appeal to me for the long run. And when you have a company that is not even going to be profitable, like let's take a look at this real quick. Okay, I'm not crazy. Okay, in 2015, this company IPO'd for 42. It lost 42 cents a share. This year, it is going to do the worst it's ever done. I mean, they're still growing revenues because they're still growing out, but either the operating costs are getting way much higher, or I don't know what's going on. In 2020, they're going to lose $1.44, which is almost triple of what they lost in 2019. Okay, and here's the deal: you can be bad in 2020, but you got to be really good in 2021. That's what we've seen from the best high growth companies. And with this company, they may bounce back a little bit, but it's still so much worse than anything that they put out even before. Like the stock is trading near all-time highs, literally right there, just a little bit under it. And I mean, the estimates are not even getting that much better. Not only that, you're also seeing revenue growth decelerate for the first time below 45% in the past 8 quarters. I mean, this is not a company that, one, it doesn't have a unique moat that it can kind of build off of it and hopefully create some amazing product that brings people to their platform. No, they're trying to grow in a very competitive environment that seems to have more and more players coming out every single year. So once again, I am not that, I'm not a big fan of Roku, the product, and I'm definitely not a big fan of Roku, the the stock. And technically, I believe yesterday it gave me the signals to get into a short. So I think I got in at like 150.80, and so far it's doing pretty good. But right now I have a target for around 125, 130. And then lastly, let's go on to my most hated stock. Now, PENN was one that I talked about 2 months ago. This stock was trading at around 36 bucks, and I remember saying on this channel that this was the most overvalued stock in the entire market. And to have that stock almost double from where I said it, I mean, honestly, I had some of my finance friends, they made fun of me because they know how much I hate PENN. They said, what do you think about it now? Like, you thought it was overvalued then, and now what do you think about it? You got to think it's like, at some point, does price prove your theory wrong? And I think in this market, if there's one thing that it's shown us, is that price really does change sentiment. It really can, warp everything that you know, and you just become a slave to the price. If something's going up, it must be justified. It has to be justified. I think that's the time we're living in now in the market. It's like, whether it's Apple, whether it's Tesla, whether it's all these other companies that just keep going up, but the traditional fundamental metrics are way off. It just doesn't make sense to me. Like, you have a company has so much debt in an industry that is struggling right now. You're having airlines cutting flights. Travel is starting to pick up, but if flights get cut, I don't know what that's going to do. This is just not the industry to be in, but yet this stock is trading almost 15 bucks above its previous high that it was at before COVID. And you really want to tell me that it's the Barstool Premium, the app that is geared towards millennials who don't have the money to bet, nor do I think they're going to bet on a linear system that's different than your traditional system. Like, for instance, the reason why DraftKings is so successful, in my opinion, is because it overlaid off of a familiar product that we were already enjoying and playing every football season, which was fantasy football. They literally just put that formula into a betting formula and mixed them together, and it was a beautiful harmony. And I think they came out with the product at the right time, and that itself just spurred their adoption rate beyond anything. I really like DraftKings, the product. I'm not so much hot on the stock, but I love the product, and I think it appeals to millennials because it gives them that new way of betting, in a sense that they want to do something more than just linear betting, placing a bet on one team or something. They want to have this lucrative system, kind of like fantasy football. That's not to say that millennials are not going to bet, period, because there are, but you're not going to get that same type of consistency or how people play every week consistently, or play multiple tournaments every week. You may have someone bet traditionally on one game or something, but for fantasy, for FanDuel or DraftKings, you may have multiple lineups in multiple contests. And I think that's exactly what makes DraftKings and FanDuel, their model, so unique. But Barstool, I don't even know if their app is not even out, and yet people like PENN, the analysts who are covering PENN are already saying, hey, you got to buy this stock because Barstool's app is going to take 30% market share of this fast-growing industry. And it's like, I don't know, I just don't see it. Barstool is aiming at the millennial gambler, and in our day and age, there are so many different ways to use your money, not just in I just don't see it. There's just a long list that I could go rant on about, but bottom line is the premium from Barstool should not account for 15 points above its previous high that it was at before COVID, because that just doesn't make sense. Like, the industry is struggling right now, and who knows how long it could be struggling for. Like, you never know. So once again, this stock is not only extended from a fundamental perspective, and definitely from a euphoric perspective. I think there's definite euphoria in here, but technically, well, I mean, look at this stock. It is just so stretched, and I think it could still go up. Like, hell, this thing was stretched even when it was right here, and the high was at 51. It's gone up almost 10% from where that was at. Yet I just still think, going along with what's going on in the market, how high growth is starting to kind of separate from the leaders and really take on a mind of its own, and you're starting to see unity in the downside, I think this will kind of translate as well for PENN. And it was very weird today because you had a day, I think that, Wynn did really well. Las Vegas Sands did really well. You had a lot of the big casinos do well, but PENN actually started to sink today. And it could be in relation to some news that came out on MLB, and that's why DraftKings was sinking. But once again, it's like, what is PENN exactly? Is the online betting company, or is it a casino company? Because right now, I don't know where it's trading. It used to trade with the casinos. Now, recently, it started trading with the DraftKings stock. Now, I really don't know. It looks like it's still trading with DraftKings stocks, but it could go either way. Most of the company is a casino company, so when is that actually going to matter? I don't know. This is just honestly the craziest stock. I'm glad I'm shorting both of these two. Both of them, once again, are my two biggest short positions, and I will continue to. I don't know if I'm going to continue to add them, even if they get above the highs that they had today. Maybe Roku, if it gets like to 155, but I don't think I'm going to add any more to PENN. I think PENN could definitely bite me in the butt, and I've definitely gotten killed on some shorts this year. But it's at this point, it's just a wait and see game, and now we got to see how high growth reacts and how all these extended stocks act, and whether or not we're finally going to get that pullback from tech. So I want to thank you guys for watching this video, and hit the thumbs up. Go ahead and check out our website at www.thealphatrades.com for more info, and I hope to see you guys in the Advantage Discord channel. So if you guys have any questions, just hit me up on there. Peace.